give everybody another minute or so to join on in, and then we'll go ahead and get started. Alrighty, so we'll go ahead and get started now. Hello, I want to welcome everybody participating in today's webinar, Fraud and Cybersecurity in the COVID-19 Pandemic. My name is Darren Hewlem, and I'm an IT and Risk Analyst at GRF CPAs Advisors, and I'll be today's moderator. I'd like to start today off with some quick housekeeping items and explain what you'll need to do to earn CPE credit. Participants seeking CPE credit today must complete and submit a short evaluation survey that will appear automatically immediately following the webinar. You'll be asked to recall these words in order to receive credit. Please write down the CPE words when they are given and keep them until you receive your certificate. They will not be provided again. If you have any technical questions or issues during the webinar, please use the questions function to speak with our webinar administrator for assistance. The slide deck and recording from today's webinar will be available for download with the link shown here, and you also receive follow-up direct links. Technical support and CPE questions may be addressed to Nathan McElveen at his email address provided there. Today's learning objective is to understand the evolution of fraud during the COVID-19 pandemic and learn best practices to protect your organization from falling victim to fraud. I would like to introduce today's presenters for today's webinar. Walt Darengeski is an audit partner here at GRF, and Mac Lillard is a supervisor in the audit department. I'd like to turn the presentation over to Walt now.
Thank you, Darren, for the introduction, and good morning to all. Mac and I are both pleased that you can all join in today's webinar. This morning, we are going to go through fraud and cybersecurity in the time of COVID. With many people working remotely due to this global pandemic we are all facing, there are many complexities and increased risk in working in today's environment, as we all call now being the new norm. Since many of us are still working remotely, or we have been working remotely for the last 9 months, much of the internal controls that we had traditionally put in place needed to be quickly reassessed and modified in a sense to work in this new remote environment. Now, before we get started, please make sure to look at our website for any future webinars we offer at GRF CPAs and Advisors. We also have an archived library of webinars previously offered to our on our website under the resource section. There is a lot of useful information, so don't miss out. Now, we have a lot of materials to go through, including a case study, so let's get started. Now, let's start going through some of the statistics that have recently been published. The recent study from the Federal Trade Commission has recorded just over 184,000 Americans reported cases of fraud due to COVID-19. And stimulus check fraud has resulted in losses over 124 million from January 1, 2020 through August 31st, 2020. And Accounting Today reported that fraud has increased in several categories as depicted on the PowerPoint slide. First one is insurance fraud. This has increased by 12%, and this is due to false claims for COVID-related services, such as testing or testing results, treatment, etc. Loan and bank fraud increased by 11%, and this would be false applications for personal or business loans, fake ACHs, or phishing schemes targeting bank information. Financial statement fraud increased 11%, and this is intentionally misappropriating the organization's financial data in order to hide losses related to COVID. Identity theft increased 10%, typically through successful phishing schemes where fraudsters are able to extract personal information such as Social Security, credit card information, date of birth, maybe a license number, your driver's license number, etc. The list can go on. And the last one, employee embezzlement, increased 9%, which I was a little shocked by. I would think that employee embezzlement would be a lot higher. Usually, employee embezzlement is one of the significant frauds that are perpetrated. They are usually lower in dollar amount of loss, but are usually more trivial. These are employees stealing supplies, maybe fraudulently forging checks by getting access to the check stocks. So I would have thought that this statistic would be a lot higher, but this would be creating an opportunity amidst a chaotic environment, or maybe rationalizing the embezzlement through supporting the family or pressure from hard financial times. Under the fraud triangle, under the Association of Certified Fraud Examiners, there are 3 elements normally required to perpetrate a fraud. The first is the opportunity. The second is pressure, or also known as incentive or motivation. And the third is rationalization. And COVID-19 undoubtedly has created additional pressures on many workers' lives as a result of lost jobs. Unemployment is sky high, reduced hours, health concerns, medical bills, and future uncertainty. And the list goes on. Another area of concern was the PPP, the Paycheck Protection Program, through the CARES Act. Fraudsters posed as false businesses regarding loans, or they intercepted payments or stole those payments once made to an legitimate organization. So that has been another area of scrutiny and risk when the PPP loan funding was disseminated. And according to the 2020 report to the nations on occupational fraud and abuse, the average organization loses an estimated 5% of revenue each year to fraud, with a median loss per case of approximately 125,000. Those are pretty significant numbers. Next slide.
And now I'd like to just give everybody a little bit of background into how the cybersecurity landscape has changed as a result of COVID. I think everyone's pretty familiar with the term digital transformation, the COVID-19 pandemic and all of the restrictions being put into place, restricting people's ability to access their office, their ability to travel to different parts of the country or to the world as part of their normal operations, obviously came to a screeching halt. So what this digital transformation requirement was that all these organizations now had to implement ways to stay in touch with one another, to transfer files. So the reliance on third parties increased. And with that, the need for heightened cybersecurity posture. You can find just about any report out there will tell you that the biggest security risk to an organization are the employees themselves. Most cybersecurity breaches, unfortunately, are the result of employee negligence, mostly through phishing attacks. Somebody gets an email that comes in, and before verifying its legitimacy or making sure that it's from the appropriate person, or making sure that the person that this appears to come from is that actual person, employees are going ahead and clicking on these, and that's resulting in some sort of cybersecurity breach. So as you can see, the cost of the average data breach has increased by $137,000 since March, since the restrictions were put into place, and the WHO, actually World Health Organization, announced the COVID-19 pandemic. So this is one, increase the need for a lot of IT projects as it relates to implementing new technologies or just strengthening the controls around the IT processes. So this has created a much higher workload for all of the IT departments within an organization, if it's something that's done in-house, or it's increased the reliance on third parties. And just to give an example of one of the breaches that has occurred, there was a breach of the federal disaster loan application system that impacted 8,000 small business owners who were just trying to get some sort of relief during this time. Their applications were breached, and a lot of their sensitive information was given out to the public. As you can see, this bottom point notes that phishing attacks are the most common scheme. Again, I don't think this comes as any surprise to anybody. Phishing attacks have kind of always been the largest scheme in terms of the volume. And this has obviously increased as a result of COVID-19 due to the amount of banking activity that's being done online, the review and approval process almost being done entirely by email for a lot of organizations. This has just increased the ability for hackers to slip in some of these phishing attacks and have somebody erroneously click on a link that's going to give them access to your network, or that might actually authorize an ACH or some sort of payment to a fake bank account or an illegitimate organization. So moving on to the next slide, I do just want to talk about digital transformation a little bit more. Obviously, more organizations have been forced to kind of implement these different means to communicate or to share or retain any of their documentation. A lot of organizations were already considering this going into 2019 or 2020. But, a lot of organizations kind of had this on the back burner, or they were waiting until resources were opened up in terms of, money or time, because it is obviously a pretty large undertaking transferring all of your data and your documentation into soft copies or, virtual means. So again, this did just kind of force this on all organizations. So the ones that were kind of being less proactive about this or weren't as far along in this process, their operations essentially came to a screeching halt again when the World Health Organization announced all of the restrictions and everything back in March. So digital transformation is the integration of digital technology into all areas of an organization, changing how you operate and deliver value. A lot of times digital transformation is, only thought about in the terms of taking all of your hard copy documents and converting them into soft copies or some sort of electronic format. But it goes a lot further than that. It takes into account all of the new technologies that you've implemented, from using Zoom or Microsoft Teams to communicate with your employees and your clients, to utilizing SharePoint or different platforms to share documents. Specifically, our organization utilizes SureLink, which is an electronic file sharing platform for our audits. And luckily, this was something that we had actually implemented years ago, just because it helps us organize all of our documentation. But this became an integral part of our audit process, again, just because of the security it provides over not only the documents that we're sending out, but the documents that we're receiving. So I touched on, the reliance over third parties a little bit on the last slide. But again, with all of these new technologies being implemented and organizations reaching out to other vendors to provide this functionality, there's a lot more risk as it relates to third parties. Obviously, any third party that has access to your systems, to your data, that provide any sort of significant service, whether it be payroll or data backup and retention, these do all provide some sort of security risk. You're not relying simply on your own organization's controls to protect your data. You're also relying on these third parties to have the appropriate controls in place to protect your data as well as your clients. Ensuring that your organization has the appropriate enterprise resilience strategies put into place. If you have business continuity, disaster recovery, so that your employees know what to do if there's some sort of significant unforeseen event that prevents them from being able to access all of the data they need, or being able to access their office and just do what they need to do in order to meet their day-to-day job functions. And then this also affects the Internet of Things. For anyone who's unfamiliar with this term, it's essentially just all of the assets or physical assets that can connect. And this can be thought of on a global scale, the way the US markets interact with markets in China or the EU to transfer any kind of financial information. But the way you would like to think about it for your organization are just all of those devices that are connecting to your network. Anything that poses any sort of risk in terms of people being able to access your data or your financial information. So again, just with the changing landscape, everybody connecting remotely, this just provides or creates more risk to the organization, because there are more ways for hackers to get into your system because of all these new devices, all these new IP addresses that are connecting to the network. So as that expands, risk just increases along with that.
Okay, and we've come to our first polling question. And the question is, does your organization have a disaster recovery or business continuity plan in place? The options are yes, no, or in process. And then please take a moment now to answer the questions, and I'll provide the first CPE word. The first CPE word is fraud. If you want to receive CPE credit, please jot down the word because you'll need it for the survey following the webinar. Again, the first CPE word is fraud, F-R-A-U-D.
All right, so that's great to see. Obviously, if we had seen a lot of no or unsure or in process, that'd be a little bit alarming. I think most organizations have already undergone this process of putting together a business continuity or disaster recovery plan as a result of COVID. Now being 9 months into the pandemic and everything, I would hope that that's something all organizations have developed. If it's not, or if it's something that's in process, we always recommend to our clients that that's something that should kind of be prioritized, in the event that there is another shutdown in the winter months as cases rise, or if there's something else that comes out of, that's unforeseen that ends up happening. And that could be anything from a natural disaster, a fire, a different pandemic separate from COVID-19. This will just help to best position your organization to hopefully not experience any sort of significant slowdown in operations or have any sort of work build up as a result of having to switch to a new operating environment.
Going through some of the fraud schemes in further depth here, the pandemic has really shaken up our business processes, and corporate desks have shifted to dining room tables. With these changes, opportunities for fraud have formed. In particular, a few opportunities stand out. And some of the predominant fraud schemes we have heard of and encountered at GRF. And this is, how the fraudsters are really capitalizing on the pandemic, and they're creating fake charities, phishing and phone scams, and false billing schemes. Fake charities, they'll try and take advantage of your generosity and compassion, for others that are in need of this money. Scammers will steal your money by posing as a genuine charity. Not only do these scams cost you money, but they also divert much needed donations away from legitimate charities and causes. Many times these charities ramp up during a time of disaster, such as earthquakes, floods, wildfires, and of course, the global pandemic we're all facing. So it should always be recommended to check the website address to make sure it's the same as what you searched for before making a donation. One method typically used by fraudsters is buy up domain names similar to that of a legitimate charity in order to dupe individuals and other organizations into clicking on the phony website. And one example here is, a charity by the name of, let's say, USA Relief might have the domain usrelief.com. Well, fraudsters will create phony websites under, let's say, usarelief.co, or maybe USA Relief or usrelief.com, or switch it around, call it reliefusa.com, in the hopes that someone will click on the link and lead them to a phony website that hacks their device. And as Mac noted earlier, phishing and phone scams, this is the most common method and most successful fraud scheme utilized. Fraudsters can pose as anyone from an individual claiming to be interested in contributing or partnering with the organization. It could be an employee of the organization's bank. It could be a vendor seeking payment, etc. Recently, there was unfortunately a local nonprofit in the DC, Maryland, Virginia area who lost over $7.5 million due to a successful phishing scheme. And unfortunately, they were not able to retrieve any of that money back. The third is false billing schemes. Fraudsters will submit payment requests for services never rendered. The invoices could look legitimate from a vendor, as it's possible the fraudster created something in the system or had access to these details, but there will be slight changes, let's say in the PO number, the details, or maybe the amount or the date of when the services were rendered. So these are all things that you need to be mindful of and look at to ensure that, you know, there are fraudsters out there that are potentially trying to get your money. Let's now move on to the next slide.
All right, so we put together a little case study based off of two organizations. And as you'll see, the organization on the left was very proactive about enhancing their cybersecurity, making sure that their IT infrastructure was very robust, whereas organization two was kind of lagging behind in this process a little bit. And then we're going to go into sort of the effects of, you know, both of these methodologies and see some of the benefits that organization one experienced versus organization two. And again, you know, the purpose of these case studies is to, one, kind of highlight the benefits of being proactive versus reactive as it relates to cybersecurity, and then just the benefits of, again, having a robust IT infrastructure and cybersecurity posture. So as you can see, organization one on the left, they were very proactive about their digital transformation process. You know, it wasn't brought on by any sort of assessment or any recommendation by funders or agencies or anything like that. This was just the insights of management seeing that, you know, this was the direction the operating environment was going. So they went ahead and started this process early in 2018. And by the time the pandemic hit, they were about 90% in terms of their financial information that was available electronically, and all of their systems and everything, and having all of that remote work capability put into place already. So again, the IT infrastructure was in place to support remote work capabilities. All of their IT assets in terms of their desktops, laptops, MiFi or Jetpack connectors, they were all cataloged, all current and up to date with the most recent patches. Any sort of updates, any sort of security vulnerabilities were addressed prior to even having to distribute these. And then they had policies and procedures over remote work, disaster recovery, and business continuity in place, so that when the disaster did hit, and everything, you know, kind of shut down, their employees knew what to reference, they knew where to go, they knew how the operating environment was going to change. And, you know, as opposed to having to scramble and pull together these documents, they were able to disseminate these, and all of their employees were well informed on where the organization was going and how they were supposed to continue just meeting their normal day-to-day responsibilities. Switching over to organization two on the right, they were in process of doing the digital transformation. You know, they had some good systems in place. They had Zoom set up, so they were able to continue communicating with their employees, with their clients and everything. But in terms of the financial information, the documentation, that wasn't readily available. That was still in hard copies within the office, as opposed to being in a soft copy format or on a server or cloud somewhere where they could readily access it. They did have adequate IT infrastructure in place in order to support remote work capabilities. However, at that time, you know, it hadn't really been tested because most people were still working from the office. So although it was in place, there were some inefficiencies within the system, and people did kind of experience some difficulties getting set up during those first couple of weeks. They did have all of their IT assets cataloged, so everything was accounted for. However, nobody had gone in and made sure that everything was current with the most recent security patches, that everything was updated, operating on the most recent updates available for, you know, whatever the platforms were that were installed, or the applications that were installed on the device. But, you know, whether it was up to date with the most recent security available to the organization. And additionally, they didn't have formal policies and procedures in place over remote work, over disaster recovery and business continuity. Again, while these things were being done informally, and, you know, it's not like their employees were completely left in the dark when this happened, they didn't have anything formal that they could disseminate to their employees, to their board, to their clients, which always just helps to, again, make sure everybody's on the same page and that they know the proper protocol to follow. So if we go to the next slide, this kind of highlights, you know, some of the results of being adequately prepared versus not so adequately prepared. So again, I'll start with organization one and highlight the positive benefits that they experienced. Again, because their infrastructure was set up to support remote work capability, they had a smooth transition to this. All employees were set up, ready to go within a week's time. There wasn't any lag in terms of having connection issues with their IT assets or anything like that. And as a result of that, there was no slowdown in operations. They weren't missing bills being paid. They weren't missing delivering any sort of deliverables to their clients or things like that. And again, their employees just weren't overburdened with work. It didn't create any sort of administrative burden, and that work didn't pile up on them. Because of this, they were actually able to shift their focus and become a change leader within their industry. And I think they were saying within 2 or 3 days, they already had their first webinar published up on their site, just giving advice to all of their clients on how to move forward during this time, what the most recent news on the pandemic is, not only in terms from an operational aspect as to, how they can transition and continue operations, but also from a public health standpoint, areas to avoid, ways to make sure that you're operating in a clean, sanitary environment and not putting anybody else, at risk of catching the disease or anything like that. And as a result of that, they did begin to see an increase in traffic to their website. The number of people that were signing into the webinars or viewing them after the fact increased tenfold. They had clients and other people that they had not been in contact with before reaching out to them to, again, try to get advice on, how they were so well prepared, and how they could, what they could implement at their own organization, to, again, just kind of help them figure out their way through this changing environment. And another bullet point that's not noted on here, but that I did want to bring up, was that this is an organization that has an annual meeting each year. So as most organizations know, obviously, if you were having a face-to-face meeting, originally, most of these were canceled depending on the time it fell. Anything that fell between pretty much March and June was forced to be canceled because you didn't have adequate time to prepare or transition into a virtual event. Some organizations that had events later in the year may have been able to figure this out, work their way around it, and do enough planning in order to make sure that the event did go off. But again, one of the benefits to them was that they were able to transition very quickly, convert this normal in-person meeting into a virtual platform. And as a result of that, they not only had a significant decrease in costs related to not having to have a physical venue, not having to pay for travel costs, for exhibit fees, and all the other things that go into hosting an in-person event. And on the revenue side of that, they also saw an increase in participation, but I think about 500% of the normal levels, because people who previous to this had not attended the meeting due to, again, having to travel or the associated costs with attending an in-person meeting, they were now able to pay a reduced fee and attend this virtually from their living room. So again, that's just another benefit that they were able to experience as a result of this. Organization two, on the other hand, they had a slow transition into the virtual work environment, resulting in a backup and overburdening of employees. This obviously drove down employee morale because people were, one, shifting into a new virtual environment. Again, some people don't like having to be in a virtual environment. Some people enjoy being in an office on a day-to-day basis. So now not only were they changing to an operating environment that they're not necessarily used to, but their work is beginning to pile up on them. So again, that just creates more stress during an already very stressful time. Then they had to shift their focus to developing any sort of policies and procedures over business continuity and disaster recovery, making sure that, again, they had this information to disseminate to all of their employees, again, to make sure everyone was on the same page, knew the appropriate protocol to follow, and just to kind of have a roadmap, assuming that the pandemic continues to persist, they know what to expect in terms of their operating environment. And again, while other organizations were able to continue operations and see some of these benefits, it took them several months just to get back to neutral. And essentially, they were in June by the time they were getting back to the point they were in March. So they just had to play catch up. And unfortunately, it had pretty negative effects, not only on their operations, but from a financial standpoint.
And we've come to our second polling question. And the question is, has your organization performed an IT and or cybersecurity risk assessment? Yes, no, / unsure, and in process. So please take a moment to answer the question. And while you're submitting your answers, I'll provide the second CPE word. The second CPE word is budget. If you want to receive CPE credit, please jot down the word because you'll need it for the survey following the webinar. Again, the second CPE word is budget, BUDGET.
All right. Again, that's great to see that looks like the majority of respondents have had some sort of cybersecurity risk assessment. I would love to see, how many people had done this as a proactive measure prior to the pandemic and how many individuals or organizations did this as a result of. But that is great to see that most organizations at this point have done something to assess their cybersecurity posture and their IT infrastructure. But we'll touch a little bit more on cybersecurity risk assessments in some of the later slides.
Now we are going to go into some general procedures an organization could adopt to reduce the risk against potential fraud schemes. The first is reassess the banking internal controls. This will help an organization against fake ACH payments, fraudulent checks, and other methods of payment. Positive pay and ACH block are two ways an organization can establish with the bank so that your accounts are not susceptible to fraud schemes. ACH debit block service is a service that many banks can offer, and this service will only allow originators that you designate as an authorized originator to post ACH debits to accounts that you enroll. So this is one way to combat from fraud and other improprieties happening. Another one is a positive pay system. This detects fraudulent checks at the point of presentment and prevents them from being paid. This means that checks that have had their payment amounts altered or which are derived from a stolen check stock will be flagged by the bank. Something else an organization can adopt procedurally is having dual signing authority for outgoing payments. Whether this is check or wire transfers out, again, this would be set up with the bank, maybe establishing an internal controls procedure where maybe using a certain dollar threshold amount where you require these stringent additional procedures added. Again, this will combat against employee fraud or other third-party fraudsters from fraudulently clearing out your accounts. Another way to protect your organization and to reduce the risk of fraud and other improprieties is heightened review and approval processes. You should avoid email for payment authorizations whenever possible, and never send money or give personal information such as credit card details or online account details to anyone you don't know or don't trust. Two very popular electronic payment processing platforms that have helped many of our clients who have a especially limited number of personnel in their finance department is to utilize Bill.com or AnnieBill. With more employees working remotely, digital approvals are being relied upon more frequently, which can make it easier to falsify signatures on documents such as expense reports, purchase orders, vendor contracts. So something that we have established at GRF, and I know several of my other clients are using, is DocuSign. DocuSign is a secure way to get documents signed securely. Again, you may want to think about dual signing authority at various levels of the purchasing process, which will reduce the risk of fraud, and have a clear checks and balance in place, and having multiple eyes review documents will reduce the threat of human error or potentially missing something. Other general procedures an organization can implement and can aid to help protect against fraud and other improprieties is to provide frequent training to employees. One security awareness program that I believe is very good for training, and I've had the pleasure of using the program several times, and it kind of goes through some of the general do's and don'ts, is called Know Before. I'm not sure of the cost but they have a pricing scale depending on the number of employees at your organization who will be utilizing the training, simulations, and the other features. And they also have certain, whether you want to be silver member, gold, platinum, or diamond status. But something else to note, showing proof of employee training can help reduce the cost of cyber insurance, which leads me into the second part of this PowerPoint slide. Something that I recommend any organization look into is cyber insurance and having a policy around cyber attacks. This would require the organization, of course, evaluate what personal information or client information is kept, and for you and your organization to overall determine the risk associated with keeping this information. And if the information was to be compromised, what would the potential impact be to your organization?
Right, and I actually just saw a couple things come in the chat, Walt. Some people just attesting to the effects of KnowBe4. That's great to see that somebody's organization went from 30% to 1% in terms of their click rate. So that's awesome. And so this slide, I just wanted to highlight a couple of policies and procedures that are very helpful for not only serving as a fraud control, but just serving as a deterrent for fraud. Having these policies and procedures in place is more than just a formality. Having these in place and disseminating these to your employees just serves as a deterrent. Obviously, if somebody who's considering committing fraud, it works at an organization where they fully believe that there's a no tolerance culture against fraud and that there's active investigations going on into any sort of suspicious or fraudulent activity, they're more likely to not commit fraud. Of course, the risk of getting caught is perceived to be higher within that organization. So first off, I'll kind of touch on whistleblowers and conflict of interest policies because they are somewhat interrelated. These both kind of started garnering a lot of attention after Sarbanes-Oxley back in 2002, but have just become best practices for any organization throughout any industry. So whistleblower, this provides a chain of command for reporting any sort of suspicious or unethical activity. And one of the things, or one of the gaps that we see with a lot of our clients is that they'll have a formalized policy in place that maybe outlines a chain of command, but there isn't any sort of anonymous channel for reporting any suspicious activity. And what that allows is, one, people are more likely to speak up if they can do it anonymously. There's no fear of retaliation or anything like that. But then it also provides a means that if, in the event that the whistleblower policy isn't necessarily complete, or that, the person reporting suspicious activity is ultimately reporting maybe the person that they're supposed to report to within that policy, you obviously don't want to report potential fraudulent activity to the person who you believe is committing the fraud. So again, that just provides another means to report this anonymously. And that can be done through a hotline, through an email account that maybe is only accessible by a board or somebody who's not part of the day-to-day operations, an online portal, or any other means, anything that works for your organization. Conflict of interest as well. These are annual attestations by the board of directors and employees, typically on an annual basis, just that they have no conflicts of interest in regards to any of the significant vendors that the organization works with, any partnering organizations, or anything like that. And another gap that we do see with clients a lot is just that although they'll have this conflict of interest in place and maybe they apply the annual attestation to the board, it's something that they're not requiring for employees. And employees are the ones who, really should be of the utmost concern, especially employees who are involved in the purchasing process or procurement or vetting, things of that nature, because obviously they do have the ability to potentially affect business decisions from a purchasing standpoint or whatever the relationship might be. So just extending that requirement to employees to sign these on an annual basis and retain those is just, again, just the best practice. But I did just want to note, there is a common misconception about conflicts of interest. A lot of people feel that if there's a conflict documented, that this precludes your organization from working with a significant vendor or partnering with another organization, when that's not the case at all. The conflict of interest attestation serves as a control, again, just to document that conflict of interest. And in the event that the person who has the conflict is involved in the decision-making process regarding a significant vendor or whoever the conflict is, that they recuse themselves from any sort of decision-making process as it relates. Again, just so that, everything is done above board, that that everything is transparent, and that there's no sort of, ulterior motives coming into play. I'd also touched on business continuity and disaster recovery plans. These address how to respond to and remediate issues arising from fraudulent activity or just any other unforeseen significant event that can significantly affect operations. So disaster recovery is kind of a subset of business continuity and relates more specifically to IT, how you back up all of your data, and again, just how you have all of that available for your organization to continue their operations in a changing climate. And then lastly, it's just internal control policies and procedures. This identifies segregation of duties over the key processes and should address those that are most susceptible to fraudulent activity. And again, not only having strong formalized policies and procedures in place, but also making sure that you're reviewing these on an annual basis. Again, as organizations grow or shrink or diversify, you obviously want to make sure that these are still relevant. If you have somebody who's in one position performing a job function who gets promoted, and then the policy or procedure isn't updated to reflect this, there may be segregation of duty lapses. So just reviewing those on an annual basis to, again, tailor them to the organization, make any necessary updates, and just keep them relevant. And so I'm just going to take some time to talk about artificial intelligence. This is one of the things I'm most excited about within, fraud controls, within the auditing world. I am an auditor by trade. That's what I started in my career 6 years ago. So being able to utilize this technology has been really exciting because it allows for the analysis of just massive sets of data in a pretty short amount of time. Obviously, it's a time frame that would be unachievable by a person. So this typically is in relation to analyzing general ledger details. This can obviously be tailored to look at any specific areas, whether it be a particular revenue stream, accounts receivable, accounts payable. It can be tailored to analyze those sorts of data sets. But where we've utilized this most is analyzing general ledger details, because importing these into these platforms does allow the analysis of 100% of the transactions. Obviously, as an auditor, you would never be able to do that. There's too much, it takes too much time. There's too much of an administrative burden. So what these artificial intelligence platforms do is that it analyzes all of the data based on control points. And to give you an example of that, the platform we utilize is called MindBridge, and they use 28 unique data points ranging from a whole different set of things. One, that being Benford's law, which takes into account the frequency of the way numbers appear. Ideally, the numbers 1 through 9 should appear approximately 11.1% of the time. So if this analyzes a data set and it's seeing the number 3 is popping up 40% of the time, one thing that people, fraud studies have proven is that people committing fraud will kind of subconsciously use one number over and over again. If somebody's born in the month of July, they might use the number 7 and not even realize they're doing it. So again, this will just give a slightly higher weight in terms of the fraud risk to any sort of transaction that's utilizing that number that is appearing, at a higher frequency than others. Then that would be combined with any sort of materiality considerations. And ultimately, it ends up grouping all transactions into high, medium, or low risk categories. That way, anything that's high risk ultimately should be tested. It should be reviewed. And then it's up to the discretion if you're going to test something or just review anything within those medium to low risk categories. But it does help to provide a slightly higher level of assurance, that the organization is free from fraud. Obviously, it can't provide 100% assurance, but it does help to increase that level a little bit. And artificial intelligence and business intelligence are sometimes used interchangeably, but there are some distinct differences, and one of that being that artificial intelligence platforms utilize machine learning, which means that the more the software is used, the more efficient it becomes. artificial intelligence and business intelligence platforms both provide extremely valuable data analytics. They take, again, just large data sets and kind of put these into pretty easily understandable narratives or illustrations that break down the level of expenses or where the majority of the organization's resources are being allocated. But again, going back to machine learning, the biggest benefit of artificial intelligence is that if you're going from year to year, again, it's going to begin to learn from the data sets as you import them. So for example, if there's a transaction that's flagged as high risk, maybe it's due to the materiality level or the fact that it was posted on the last day of the month. So this gets flagged as a high risk transaction. You go in, you review it, and you verify that this actually isn't a high risk transaction. This is something that's done in the normal course of business. You can then check that, mark it as okay, mark it as a normal transaction. And again, the platform is going to learn from that. So the next year when you go in and import that data, it's not going to give these higher weights to these sorts of transactions because you've already cleared that in the prior year. So again, the more and more you use it, the more efficient and valuable it becomes in determining these higher risk transactions. And also, again, just giving you valuable data analytics, illustrations that you can include in board reports, reports to your clients that again are just very user friendly, very easy to read and interpret. And again, that is something that's in common with business intelligence platforms and artificial intelligence platforms, but AI takes it a step further with the machine learning capabilities. And so I'm going to kind of move through these last couple slides kind of slow. I know we're approaching 11:50 and I do want to leave some time for questions, but making sure that the organization has an IT strategy in place is also a critical piece of just making sure that, again, your organization is addressing all of the items that they need to in order to adequately secure your data and provide your employees with the best possible resources to, again, continue working in a virtual environment. And again, another gap that we see is IT is taken into account during the strategic planning process. There are specific goals and objectives that are outlined. However, there should be a specific IT strategy set up for the organization that kind of dives a little bit deeper than, just the normal strategic planning process. So an example, if your organization is to grow the organization or increase membership or program revenue, but right now your current IT projects are focusing on streamlining the purchasing process. While this might be, a necessary project and have great value to the organization, the money might be better spent on securing data or implementing a more efficient CRM system, because if the organization suffers a breach or mismanages member or donor information, the resulting reputational issues could severely impact the organization's ability to grow. So again, the goals and objectives of the IT strategy should coincide with the overall strategy and support those strategic objectives. So again, these are just, these little bullet points here are just some items to consider. I know we've already touched on, policies and procedures and clearly defining roles and responsibilities, training, but also monitoring and enforcement is a critical component of this. IT isn't something that should just be, we finish a project and kind of just leave it to do its own thing. It should be followed up on. Logs should be checked if any issues, any sort of help desk issues, any kind of downtime suffered by the organization should be documented. Any issues with third parties should all be things that are taken into consideration when developing the IT strategy. And feeding into the IT strategy, here are just some examples of useful technologies. I'm not going to go into detail on all of these. I do just want to highlight a couple. The first one being cyber assessment. There are multiple types of cyber assessments that can be done, and Darren is actually going to go into detail on one of the cyber assessments that we provide to our clients that provides what we refer to as a hacker's perspective. It uses open source information. It doesn't touch an organization's servers or anything like that, but it provides a hacker's perspective of the organization or from an outside perspective. And then cyber assessments can also be, vulnerability tests, penetration testing that are a little bit more intrusive. But again, that kind of ranges from minimally invasive to, a full-on assessment. So again, there's various levels of, security that you can go through in that. But then also utilizing any of these other software, any of these other technologies just to protect your data, protect the information flowing in through emails, making sure that all of your data is backed up, And we like to recommend following the 3-2-1 rule, which is essentially there should be 3 copies of your data, the original or the production data, and then 2 backups, ideally in different formats, disk versus tape. And at least one of those should be held off-site. Again, in the event you're not able to access your office or it burns to the ground overnight, there's something held off-site that can be restored so that you're not just scrambling to pick up the pieces.
And we've come to polling question number 3. The question is, do you feel that your organization is adequately prepared to prevent, detect, and deter fraud? So please take a moment to answer the question. And while you're answering the questions, I'll provide the final CPE word. The final CPE word is filter. If you want to read CPE credit, please jot down the word because you'll need it for the survey following the webinar. Again, the final CPE word is filter, F-I-L-T-E-R.
All right. So again, it's great to see these the positive results coming from these polling questions. Again, we do recommend that everybody be more on the preventive side as opposed to the detective side. But it is great to see that, most organizations do feel pretty confident in their ability to prevent, detect, and deter fraud. Again, if there are any questions following this webinar, please feel free to reach out. If there's any sort of, measures that you believe you could implement that you have any sort of questions on, feel free to contact any one of us. We'd be happy to field any sort of questions you have.
Alrighty, so I will share my screen real quick. Nathan, if you want to stop sharing, I can. Thank you. All right, so like Mike mentioned, this is a example of a scorecard that, or a risk assessment or cybersecurity assessment we run on our clients. So some of the sections that are covered here are patch management. So we'll go out and collect the data that's already publicly accessible. So every website gets scanned pretty much daily and it goes to a database. So when they say you truly write something online, it is truly online forever. You really can't delete it even though you delete it. So it scans for patch management. It'll go out if you have any web applications out there. It'll also scan that and make sure their security is correct on there. Website security, you'll check and make sure the coding, the performance of your website on a mobile app or a mobile device is smooth and quick. For SSL and TLS security, that is the lock in the top left corner of your screen. And that lets everybody feel secure. So it'll check and see if maybe you're running outdated protocols or outdated security on your website. Credential management, obviously it scans the dark web and sees if anybody from your organization is potentially has their credentials lost. So the best practice is don't use your corporate association nonprofit email for non-work related things. Maybe you shouldn't use it for Facebook or Ticketfly or different things. So from this example right here, we have multiple people from this organization, CenturyLink, that have lost their credentials on Scentbird, which actually found out is like a perfume Stitch Fix type thing. So they send you sign up and they send different perfumes or stuff for that. And the next one is hacktivist shares and social network. That is, hackers like to share information and boast about how they've broken into an organization. So we'll scan the dark web again and see if there's anybody talking about your organization, about how they're trying to get in, tactics they're trying, or if they've already gotten into your organization. The next one is information disclosure. This one's really helpful for international organizations. The newest part of this actually scans your privacy policy and it'll actually check and see if you have all the sections required by GDPR. So it'll ask you, how do we collect your data? What do we do with your data? Are you able to opt out and not have us collect your data? Things like that. So the email security is also a really important one. It'll actually scan everything about your email and actually tell you if everything's configured, if the configurations are set up correctly. Are you sending email from multiple places? Are you sending one from, say, Office 365 or Google? They'll actually set up it's called an SPF record, which announces to the world, I send email from this location, which is great. They'll set it up. but they won't set up if you're sending email from Constant Contact also. So you just have to let the whole world know where you're sending email from. If it's one platform, 2, 3, 4, 5 platforms. The next really important section that Walt actually touched on earlier is fraudulent domains. It'll actually scan and give you ideas of different domains. For example, the example company we used was CenturyLink. So some examples are CenturyLink quote and CenturyLink quote misspelled, but very similar. And so we'll actually scan and provide a list of all the possible domains that are already owned by organizations. You can check and see, are they real organizations or is it potentially fraud, and actually contact the registrar and potentially get their website taken down. If you have more things, so we have web ranking, how your website ranks up against other websites, larger organizations, smaller organizations, really how Alexa and different search engines look at your website, how many unique views or new unique clicks go into your website, how to get more people coming to your website. So it looks like we have a couple questions going in. Oh, that was just Walt. So DNS Health right here in the middle. This is converting the ones and zeros of computer language to like grfcpa.com. It's a lot easier for everybody out there to remember grfcpa.com than it is to remember 192.168.4.5. So you can obviously change your website, but it'll check that. There's some other things that'll check it, but we can go on to questions now. And alrighty, let's see if we have any questions. So the first question we have is, do you believe that the fraud statistics provided in the earlier PowerPoint slide will significantly increase, especially with the vaccine getting distributed and we start heading back to the office? So Walt, do you want to take that one?
Sure, I would be happy to take that one. And yes, I believe that a lot of the numbers that I quoted in a previous slide are significantly going to increase. Typically, occupational fraud cases last 14 months before being detected. So as they start rolling out the vaccine and people start going back to the office, I truly believe employee embezzlement schemes are going to be significantly more. If you remember in a previous slide, it increased 9%. I think it's going to double. When people start heading back to the office, they're going to see that, given the uncertainty of where our economy is going to go, and with the environment and with COVID and, are we going to be in a recession or a depression? There's a lot of uncertainties out there. So I think there's going to be a lot more lawsuits out there, and uncovered frauds and schemes will be a lot more prevalent as we start heading back to the office.
All right, great. And we probably have time for one more question. So let me pick one that came in. What would you say is the single best proactive measure for protecting against fraud? And I'll let Mac take that one.
Sure, thanks, Darren. I would have to go with employee training on that one. Again, as I had mentioned before, employees always do pose the biggest security risk. And again, the fact that phishing schemes are typically the result of a cyber breach and have, the largest rates of return for hackers, making sure that your employees are trained on how to identify any sort of phishing emails, making sure that, there are some trainings available, especially through KnowBe4, as Walt had mentioned, that sends out these dummy emails that are, again, they're designed to look like real emails, but instead of actually clicking on a phishing link and somebody gaining access to your network, it just sends a notification to your IT provider letting them know that you failed, and then ultimately requires some additional training. So having that ongoing, doing that a handful of times throughout the year is extremely beneficial. And then just doing any sort of other annual training on the way the organization's IT infrastructure has changed, anything that's, kind of garnering a lot of attention within the industry in terms of up and coming schemes or new resources utilized by hackers to gain access into networks. Having any sort of those trainings that cover the IT infrastructure as well as cybersecurity best practices on an annual, at a minimum on an annual basis, I would say is probably the best proactive measure that you could take.
Great. Thanks, Mac. And I know we're just out of time, so I want to thank everybody for coming out today and listening to the webinar. If you have any additional questions, feel free to contact each one of us. Our information is on the screen right now. And then you can also download the slides so you can have them if you weren't able to grab them. And I want to thank everybody for coming out today. And please remember to fill out the email or fill out the survey following the webinar so you can earn your CPE credit if that's what you need to get. All right, thanks a lot.